Markets are volatile, times are uncertain, there's a crash coming. Of course, at times like this, long-term investing plans will have poor returns or even losses. It just makes sense to lock in your profits on a day-to-day basis, right? Well, in this video, I'm going to provide you with all of the hard truth behind day trading, how well it works, and how you can make profit out of all of the information that I'm going to give you. Day trading is a new fad in the side hustle culture. You see all of these 22-year-olds drive their Lambos with the money that they earned out of their day trading profiles. And day trading is exciting, yet it feels safer than holding on to a long-term contract. It feels like the day trader lifestyle is heavily sought after. Have a look at the Google Trends graph for day trading over the past 5 years. It almost looks like a stock worth investing in. For those of you new to all of this, let me clarify what I mean by day trading. Broadly, there's two ways that a common man can participate in active markets. One is investments and the other, speculations. Let's say I analyzed the dating market and I concluded that Bumble has an advantage over Tinder and Hinge. In that case, I'll invest my money into Bumble and then wait for a few months or years. As the company grows with the services it provides, so will my investment. On the other hand, let's say I speculate that more people are going to buy Tinder over the next few days because of their marketing. Now, even if I feel Bumble will do better in the long term, I'll buy Tinder stocks before other people do. Then, after other people buy Tinder shares, which drives its price up, I'll sell and lock my profit. The second strategy is called speculation, and day trading is a kind of speculation you do in a span of a day or even a few hours. Now, there are a lot of good YouTube videos that dig deeper on the peer-reviewed analysis of day trading. I'll put links to a few of them that you can watch after you watch this video. They usually talk about the statistics of returns, and I'll briefly mention them a little later in the video. But a far better way to convince you if you should day trade or not is to explain you what happens in the big picture when you day trade. So in the dating app example, try to see where the money came from. So in the first case, when we invested in Bumble, Bumble provided services to its customers and the customers gave their money to Bumble. So overall, the customers valued the service more than the money that they were paying for it, and Bumble valued the money more than the effort they had to put in to provide the service. It's a win-win situation, and that's how an economy works. When you buy a car, you value the utility of having a vehicle more than the money you pay for it. And the car manufacturer values your money more than the effort it takes to make a car. Because both parties are benefiting and nobody loses any value, we can say that net value is created in this transaction. This is something called a positive sum game. And that's how an economy grows. Any profession that you can think of, doctors, cleaners, transporters, they all generate value while they're earning money. Now, think about the time you play poker with friends. If you ignore the fun you have and strictly consider the monetary value, this is something called a zero-sum game. Money is simply redistributed from the one that loses money to the one that wins without generating any additional value. This is identical to what happened in the Tinder example. The profit I made did not come from any value that Tinder generated. I simply took the money of other investors by buying before they did and selling before they did. A prime example of a zero-sum game. So as you might imagine, day trading is a zero-sum game. The traders aren't generating any value. They're simply trying to take advantage of inefficiencies in a market and take money out of investors and other traders. So let's have a look at the players in this zero-sum game. One is you, the trader. The other is your competition, the hedge funds, the other traders, and so on who are trying to take your money as soon as you enter the market. And the third is the broker who takes commission on every completed trade. Keep in mind we're ignoring the long-term investors because they invest once and they forget about it. So the majority of the game is played between these three players, and that's what the majority of the volume comes out of. So out of these three, the broker will always earn money as long as the game goes on. So if all the traders combined pooled a total of $1 million in a market, then as the game goes on, the broker will slowly take away money from this pool and the pool will shrink down. So to make any money, you need to beat other traders and hedge funds, and you need to do that quickly. But so far it feels like it's a game of skill. As long as you're better than most of the traders, you'll earn money, right? Well, that's the thing. Day trading is sort of a game of skill, and banks and hedge funds realized that a few decades back. And so, there was heavy investment in recruiting math PhDs, statistics PhDs, and computer science PhDs in order to make algorithms and high-frequency trading facilities to gain an edge over other traders. These algorithms are called calculating machines, and today even have the support of neural networks. Basically, there's no pattern in the market that you can see and these trading bots cannot. And it's difficult to imagine how hopeless the situation is. So let's try an analogy. Suppose you're an athlete trying to race a distance of 1 mile. On the surface, it's a skill-based endeavor. You train hard for years, learn all the right techniques, purchase the right shoes, and have the right genetics for this race. Then, on the day of the race, you see that you have to race against a Formula 1 car on a straight runway. In our case, all of the preparation is similar to getting, let's say, a PhD in statistics, which already most of you might not have. But for the sake of argument, let's say you do. Even then, you cannot beat a machine specialized for this task. Even if you buy a car, which is equivalent to making or buying a trading bot, you still cannot beat an F1 vehicle, right? To verify my point, I'll briefly mention the statistics of how a typical day trader does. The paper by Brad Barber and collaborators looked at a 15-year period from 1992 to 2006, where it looked at 450,000 day traders in the Taiwan stock exchange market. Note that this is a time when trading automation wasn't as widespread. Also, the Taiwan market was small, so there was a lot of opportunity for day traders to take advantage of the inefficiencies. Despite all of these things tagged in favor of traders, only 500 of them, or 0.1%, were able to beat the market. And even in these cases, the few day traders had insider information about the small cap stocks that they invested in. This allowed them to buy or sell in advance, taking advantage of the information asymmetry. They could be employees of these small companies, for example. A more recent study by Fernando Chag and collaborators looked at the Brazilian futures equity market from 2013 to 2015. This was in a bigger market with lesser inefficiencies, and it was in a time frame where high frequency trading was at the rise. The study looked at 20,000 day traders, and forget beating the market, only 3% of them made any profit at all. Almost all of these people made profits less than the daily minimum wage, and only 1% out of these 20,000 was able to match up to the market. So all of them were better off just investing once and then forgetting about it. It also showed that traders that traded more often had bigger losses. This is the kind of pattern you see in casinos or other gambling sites. If you're interested in these statistics, you'll find more studies in the description below. But the bottom line is, even if you're the most talented day trader in the world, over a long time you're definitely going to make losses because, well, an athlete cannot beat an F1 car. So by now I think it's quite obvious what the sensible thing to do is. In fact, you're more likely to make money on a casino's roulette than by day trading. But if you're still not 100% convinced, let's try to have a look at the ethics of day trading. As I mentioned earlier, almost all professions and services are win-win situations. The buyer values the product or the service more, and the seller values the money more, creating a net value in each transaction. The same is true if you work for someone. In that case, you value the money or experience more than the time you're giving the company, and the employer values your time more than the money that they have to give you. But when you look at day trading, there's no additional value that's generated. If you turn a profit, that means you're taking money from somebody else for nothing in return. For you to win, somebody else must lose. So even if you manage to ensure that you're not making significant losses by day trading, you're still using your time for generating no value for the world. In fact, you're taking from it. And that's no different from conning people for money. You're just doing that in a more sophisticated way. And like we saw in the studies, to make any significant amount of profit, you need to engage in insider trading. And that's a whole another Pandora's box in terms of ethics. So it's quite easy to see now that there's no 22-year-old who bought a Lambo from the money they earned from day trading. But there are definitely 22-year-olds who bought a Lambo because of day trading. Here's what I mean. You probably have an uncle or a friend who claims that they put all the money in a day trading account and they profit upwards of 30% each year. They say that it's all about practice and skill and the balls to never give up. This is actually quite common, and it has a lot to do with human psychology and in general the way our brains are wired. Humans are terrible at statistics, for reasons not relevant to this video. Given the highly random and volatile nature of day trades, combined with the ability of traders to consider arbitrary windows of time to calculate their profits, combined with inflation and in general a positive trend of the market, combined with clever tactics and psychology of brokerage platforms that make us believe that trading is working for us, it is extremely easy for us to believe that we are doing better than we are, maybe even better than the market, especially if we don't have a degree in economics or statistics. This is the gullibility that is preyed on by many profit-seeking individuals by making scam courses, scam indicators or scam strategies that claim to make profit in the long term. Sometimes even the people that put out these courses believe in their own scams. And it is these courses that earn the 22-year-olds their Lamborghinis. The fact is, if anyone has the ability to beat the market more often than not, then they'll become an overnight billionaire because every single rich person will invest in them. And sadly, we don't see that happening with any individual day trader in the world. So any and all day trading apps, indicators, strategies and live walkthroughs, free or paid, are at worst scams and at best people that genuinely believe in their faulty products. If there was a course that worked, every single trader would buy it and then none of them would make any profit because this is a zero-sum game. So let's say you understand how unlikely it is to make money over the market and how ethically questionable all of this is. But you're all about the trading lifestyle and you really want to day trade. Well, I don't have any scammy courses to sell you. I never will. and I don't have anything to gain whether you follow my advice or not. But the techniques I'm going to mention are the only proven techniques that increase the likelihood of success. Keep in mind, I do not recommend day trading except for entertainment, like casinos. But if you want to earn money, this is your best and honestly your only shot. 1. Consider swing trading. Trades made over multiple days or weeks based on quick, reliable sources of news still seems to make a little bit of money. Momentum-based strategies seem to work best in these cases. But keep in mind, the returns still don't beat the market on average. This simply increases your chances for doing so. This strategy has been shown to work from the 1990s all the way to as recent as 2022 by many research papers. But the returns have been reducing and it's uncertain how long this will work. 2. Pick a market with very high inefficiencies and very low competition. Small standalone markets like Zimbabwe, Ukraine, Jamaica, Palestine, or unknown cryptocurrencies are much better options for day trading than practically any market that you've heard of. It's like going back in time to the Taiwan study that I mentioned, and there's very little automation and it's a small market with a lot of inefficiencies. Sure, even then only 0.1% of all the day traders will beat the market. But that's better than the 0% on all American, European and Forex markets. Although keep in mind, many of these markets have high occurrence of frauds. 3. Learn to code and make an automated trading bot. Bots will always be faster and smarter than humans in specialized tasks like trading. Making a trading bot is not too hard, especially if you check out my video on how to learn to code. Of course, do not buy a trading bot, because if it exploits a certain inefficiency and a lot of people are trying to take advantage of that, then that inefficiency will dry out and you will not get any money. It obviously helps to do a course on machine learning or quantitative finance and in general be comfortable with math to be able to make a good bot. 4. Day trading is practically a pyramid scheme. So you can gather a lot of inexperienced traders and make them the majority of the trading volume in your market. You can even make your own market, let's say your own cryptocurrency, and you can squeeze the money out of these people's pockets. And conversely, the lesson here is never to day trade in a small market that somebody else suggests to you. At this point, I feel like I'm teaching you how to be a thug. But honestly, that's the only way to make money out of day trading if you don't have access to insider information. And I would truly hope that you use this information to stay safe from scammers rather than scamming somebody else. I won't be putting any affiliate links in the description or even monetize this video. I don't wish to earn any money from this video. I simply want to reduce the misinformation campaign around day trading. And I hopefully prevent more scams than I enable. So please help share this message across the internet so that no gullible person spends their life savings on a 22-year-old with a Lambo.